what we have on the agenda today is obviously going to review May, right? Plan for June, show you guys how I plan for a new month. Many of you are familiar with my higher time frame analysis process, but some of you aren't. So we'll not only break that down, but we will also deep dive into my DDE model, right? I've created a bit of a illustration and graphic sheet that I haven't shown anyone yet. Lamar, you've seen a bit of it, but to everyone else, it's brand new. And hopefully it's simple enough for you guys to just quickly identify DDE setups, right? Draw, delivery, and entry in trending markets, in reversing markets, in all-time high markets, right? And understanding the difference, something a lot of people have been asking me is, how do I know when I should keep going long if market is making new all-time highs versus, start looking for reversals short? So we'll answer all of those things. Before we get started, I do want to say any questions you guys have, I only have about 35 minutes. Please just send them in chat and I'll do my best to respond to them as quickly as possible. But first off, I want to give a congratulations to a friend of mine and a successful trader, Chance, in the Discord. He just posted, he got his first 2 payouts. I had known Chance for quite some time. I told him, I know you trade, join my group, learn my strategy. He put in the time and he just got his first 2 payouts on Apex accounts. Okay, I sat down, I had lunch with this guy. I told him to switch to my strategy. I told him you won't regret it. And he just got 2 payouts, both for $1,500 maximum payouts. And he's already running it back up, ready to actually request his second round of payouts. So congrats, Chance. I want this for all of you guys as well. Now, as far as June plans for the group, we have our daily morning streams that I host and run every single morning, which private circle you guys love. We will also be starting our afternoon streams for everybody to enjoy as well. ZK, another 6-figure paid out trader using the DDE model, will be hosting afternoon streams. Now, he might not be trading because he also trades morning session, but he's going to be annotating price, calling out stuff as well. What time do I live trade? Every morning, 9:30 a.m. Eastern time for the New York session. Now, let's get straight into it, right? May was a good month. It has been a tricky market though. Just making new all-time highs. If we go to higher time frames here, just looking at a monthly candle. This was April, this was May. Nothing but bullish distribution, bullish order flow, right? April is when we initially created those new all-time highs. May, we just expanded upon that, closing pretty much at highs. Right, I think the most significant event regarding price action in the month of May was this pullback right here, which you guys know I've been talking about for quite some time. We've obviously created multiple bullish weekly FVGs, but in the month of May, and only a few weeks ago, I don't know why I can't click this brush tool here. Anyway, you guys see this bullish weekly FVG was retraced into. Now, I expected a positive reaction out of that because that was the first time we had broke a weekly low in 7 weeks. And this was the week before last. We shot right out of that. I'm not expecting much more downside after such a significant higher time frame pullback like that. Okay, so that is what is delivering us to new all-time highs. Because yes, while we do keep going up and up and up, market will eventually pull back. And if the context, the underlying narrative is still ongoing, we will react to that, which we saw the week before last, right? And that sent us to new all-time highs. Now, something else to look for, aside from just reactions to bullish FVGs, is the inversion of bearish FVGs, right? The same inversions that we use on the 1 minute and the 30-second, apply those to your higher time frame charts, like the daily. I have this bearish FVG outlined in purple because that is exactly what happened here. Okay, market created a bearish FVG on Friday, May 15th. That was the last time we did that. We came down. We did not inverse on this candle here. Be very careful when you're looking for inversions and actually hover over the candle and look at the closing price. If you guys see, I'm hovering over this candle. Just look right here. Look at the closing price, 2944725. Where does this FVG end? 2944825. So we didn't close above on this candle here. However, we did on the following, and then look what happened the day after. Boom, right? New week opened up, gapped up, and ran. That is the significance of the invalidation of an FVG, right? Otherwise known as the inversion. Only when it is properly inverse on this candle here does the market, take off, blow off top. So how should you be approaching higher time frames? Look at your monthly candle, right? Look at your weekly candles. Look at this FVG reaction here. Look at your daily, because we're going to see pullbacks occurring on the daily, more present than the weekly or the monthly, of course, and wait for those bearish FVGs to be inverse. This will tell us, is the market going to keep making new all-time highs? There is your clue. And then when you go to intraday time frames, like the 4 hour, like the 1 hour, just outline, your bullish FVGs. Are we respecting them? We were tracing to a bullish 4 hour here. As you can see, this was the only bullish 4 hour in this price leg. Market shot out of it. Okay, we never close below. We wick below it. Sure, I don't care about that. I care about body closes. Wicks are just noise. And what do? We make new all-time highs. Same thing happened here. Created a bullish FVG, the only one in this leg. Retraced into it, shot out of it, new all-time highs. Market literally you don't need indicators. You don't need, moving averages. Use them if you want. I don't use them, and this is why. Because I can understand order flow and price action just using liquidity and using FVGs, right? Inversions and reactions. That is how you need to approach the market. Now, there are other tools that you can use to aid in your bias, which we'll cover right now. Ming, welcome. Good to see you. I appreciate that graphic. I'm going to use that if you don't mind. Can you ask off-topic questions? I mean, you can ask. If it's appropriate, I'll answer. Wrong, welcome. Okay, now what else can you use to establish that bias and to understand the market a little bit better? Well, let me show you. We have tools, absolutely free tools. Okay, number one, Private Circle. You guys know how much I love equityclock.com. If you don't use Equity Clock, you guys need to start using it. I guess I can't screenshot it here. Well, let me just try and do this. If you just type in Equity Clock on your browser, equityclock.com, equityclock.com, go to charts, go to NASDAQ 100. This is the month of June, okay? This dashed line here. So this dashed line to this dashed line, this is June. May, obviously super bullish month. We closed, at all-time highs, just like our seasonality told us. June, there's a common saying on Wall Street, sell in May and go away. That just means big money wants to take a break. They want to go on their yachts in Monaco, wherever in the world, right? They're not trading as heavily. They have their algos running, they have their junior traders trading, but big money kind of steps away, puts the brakes on for a second, and market chops a little bit in June. This is the month of June. So I am expecting continued bullishness, but I'm going to maybe expect more retracements, more pullbacks into fresh weekly, daily, 4-hour FVGs, so on, right? And a bit more, tame price action. Summer is typically not the most bullish period in the market, right? And then we have forexfactory.com, which you need to be looking at for news. Again, I'm going fast, but I'm just going over this for you guys to have a monthly, preparation process. When you go to Forex Factory, look at high impact and medium impact news, right? Like this. What do we have, in the market here? We have high impact news almost every day this week, except for Tuesday and Thursday, but we have news all throughout, this week. So all of that being said, let's start reviewing some highlights of May, right? Green month, obviously, good losses here, good wins here. I'm going to show you what a good loss and a good win looks like, right? And I'm going to break down my model for you guys who are new to the strategy. And any questions you guys have, feel free to send them. Ali ASN, first time here, welcome. When I see a sweep aligning with my narrative, 4-hour FVG and premium, you see a protected high getting swept. How do you know if the move that created the sweep has formed your protected high? Okay, so you're saying if I'm bullish and I see buy side, or if I'm bearish and I see buy side swept, and you use a protected high, how do you know if that? I don't put my stop loss at the high of a significant liquidity sweep. Okay, I'm taking entries on the 1 minute and the 30-second. I have probably 100 hours worth of content on YouTube for absolutely free detailing how I use, all of these higher time frames in relation to these lower time frames, right? The 1 minute and the 30-second. This is where I'm taking entries, and that's what we're going to focus on right now. So yes, I will use a higher time frame liquidity sweep, like a 4-hour or 1 hour, et cetera, but I am not, placing my entry or my TP or my stop based on the 4-hour chart, where liquidity might have been swept, if that answers your question. Yeah, yachts for the whole group coming soon. All right, so let's look at a few trades real quick. Now, what is the DDE model? What exactly is my strategy for anyone who doesn't know? And this is probably going to take 30 seconds. If this is preaching to the choir for you, good. I'm glad you understand the model. For everybody else, let's take a quick look, right? So for reversals, this is what my strategy looks like, okay? And again, this is stuff that has been super simplified for anyone to understand. Reversals, what is my draw, right? The first D in DDE. Fresh FVGs formed in the trend. So if we're bearish and we're looking for a long entry, my draw is going to be some of these bearish FVGs that have been created, right? Or vice versa. If we've just ran up, right, and now I'm looking for shorts, my draw in this reversal situation is going to be opposing fresh FVGs. My delivery is, that sweep of either sell side or buy side, paired ideally with a reaction to like a 15-minute FVG. So if we're looking to go long, I want to see market have retraced into an old 15-minute FVG, shoot out of that, vice versa for shorts. right? And I'm only taking 1 minute inversions. This is something I want everyone to understand. I am continually refining my model, right? I've been profitable well over 2 years, very fortunate to have a good amount of payouts and so on and so forth. And I trade full time, but that means I'm continually looking to be better. I don't act like I'm a perfect, flawless trader. I do take losses here and there, and I'm always analyzing what needs to be changed, what needs to be improved upon. Something that I've sought to improve upon recently is using the 30-second a bit less. I love the 30-second for sniper entries, and I'm actually going to go over a 30-second setup we took recently. That was beautiful, right? But it has its time and place. For reversals, as far as, let's say market really sells off, I'm not going to be using the 30-second for inversions. It's too much noise. It's too much of a zoomed in time frame for me to have confidence putting risk on. Yes, maybe I'm going to miss the bottom or miss the top here and there, but I don't care, right? I'm taking 1 minute entries. There's plenty of signals throughout the day. So this is my reversal setup, which I will elaborate on, in the trade behind us right here. What happened on this day? This is Friday, May 22nd, a little over a week ago. You guys know I only trade the New York morning session for the most part. Every now and then I'll take an afternoon trade, but I love the morning volatility, right? Market sold off on this day, Friday, May 22nd. We sold off and we swept sell side liquidity. Very obvious sell side liquidity sweep right here. Okay, I'm not looking for longs before this sweep, right? I'm seeing bearish FVGs are being respected like we see here, right? Market is tapping into them and then selling off. So that tells me we're seeking, some significant sell side liquidity. Right here, we had a wickless candle. That's a draw. We had the swing low. That's a draw. Market ended up sweeping. And then what did it give? It gave us a 1 minute IFEG. This is a trade we took live on stream. Absolutely beautiful. Buy a small retracement here. And this actually ended up being the bottom of the morning session, right? No surprise, because we're using DDE. We're using that draw and delivery first, and then we're sniping that entry with that 1 minute inversion. So this was the trade, right? Stop low of the displacement candle that gave the inversion. And again, if you want the nitty gritty of my stop placement strategy, my profit taking strategy, watch my YouTube or look at some of our guides on WAP. We have like 15 guides absolutely free. This was my trade. Okay, I'm not going to lie to you and tell you I held to all-time highs or to high of day. I didn't. I'm not in the business of catching these perfect trades, and you don't know that the market is going to go up that high, right? If you want to leave runners, that's up to you. I'm in the business of scalping, securing base hits, and stacking consistency. Okay, so I got, close to 30 points on this trade. With 1 mini, that's $600. I think I took this with 5 micros. That's a $300 trade for me, risking about $400. Risking $200 because I took it with 5 MNQ. If I was trading a mini, risk would be 400. Profit would be higher. But taking 5 micros with a 20-point stop, absolutely sustainable, right? This is good risk to reward. I don't usually have trades with 1.3 risk to reward. My trades are typically around 1-to-1, which I love. Absolutely sustainable with 75, 80, 85% win rate. So analyze this trade, right? Why is this a good reversal setup in my DDE model? Well, let's look at this graphic, right? We sell off, we sweep opposing liquidity, we react to a higher time from FVG, we get our 1 minute inversion. I don't care about the 30-second as we're selling off here. Okay, it's bound to give us some inversions. I'm not concerned about that. I target that fresh FVG up top right here. If you guys can see it, if you have hawk eyes, because you've been trading a while, you see that fresh opposing FVG right here on the 1 minute. This is where we de-risk at. This is where I took profit at. Why? Because I don't know how the market's going to react to a fresh bearish FVG. That's where I'm going to de-risk. Does that make sense to everybody? A reversal setup, right? Wait for that delivery, have a draw, which again, as I outline here, is opposing FVGs in conjunction with all of these highs and this high of day draw. But have a draw where you want to secure profit at, then use that 1 minute inversion for entry. Does that make sense? I'll stop here briefly. How do I know that the low won't get taken? Well, we swept plenty of lows, right? We've swept New York low, we've swept pre-market lows, we swept all of these internal relative lows. Okay, and this is an all-time high market. It was a Friday. We're pretty safe to presume that we will close the day bullish, which we certainly did. Where's the FVG for inversion? Here's the FVG here. All right, as far as higher time frame, I'll just chop this off. And I think we had tapped into a fresh 15. Yep, right there. There's the FVG for that 15. Literally, I mean, this is real stuff. Like, this is a trade we took live. This isn't just hindsight. You can go in the trades channel in the Discord and see that I took this live. Look at this. Delivery, fresh 15-minute FVG reaction for added confluence. What do you guys see here? I'll remove every single drawing. Well, I shouldn't have done that. There's some stuff we need to look at later. But what do you see here? Do you see this fresh FVG? Look at that. Fresh 15-minute FVG tapped into right there right? How does that translate on the 1 minute? That's that tap. This gray box is that 15-minute FVG. That's where we reacted out of. That's the delivery. Does that make sense? The low could have got retaken. Well, yeah, and this 1 minute FVG that was opposing hadn't been tapped yet. So that's a bearish imbalance that we haven't revisited. We don't know how the market's going to react to that. That's where I de-risk. Okay, that's enough time on this setup. Again, I need to run out here real quick. I will continue to answer questions, but I'm going to review some more trades in the meantime. Let's look at a loss now. Let's look at a good loss. This was taken up here. Okay. So what did we have? This was on Tuesday of last week. Another good setup and a good loss. Right now, I want to outline why this is a good loss. I will let you guys observe what we have here. So market had established a bullish trend, right? We manipulated. So accumulation before the open, manipulation after the open, and then the establishment of a very, very bullish trend going to new all-time highs, right? So every reason in the world to be bullish, but I'm not chasing longs. I am not, buying the top here. I don't care that it goes. Real time, real trading, you cannot be, making rash decisions like buying the top because you have a gut instinct that we're just going to keep making new all-time highs. You need to have a reason for your entry, okay? I'm waiting for significant pullbacks or, internal sell-side sweeps before I go long, right? And you'll see how that paid off toward the end of the week, okay? Just because this was a loss doesn't mean we did anything wrong. Just up to probabilities, right? So what did we have here on Tuesday? Well, we established that bullish trend, we created high of day, and we left equal highs, engineered buy-side liquidity. This isn't just a swing high we were targeting, okay? This was our draw. Number one, DDE, what is our draw? All-time highs, high of day, New York high, all synonymous right here. Establishment of lower highs there, so building up on those buy stops, right? We pull away, so this is that manipulation. This is that delivery, right? We tap a fresh FVG on higher time frames here. I believe this was a fresh 5 minute, and that looks like this swing low here on the 1 minute. So there's our internal liquidity sweep. And then if we attach a fib from the low of this range up to this high, we had, pulled back into a range discount, right? So we had waited for a significant pullback. We let the market build those equal highs. We didn't get trapped up there or anything like that. And then shortly after, we see the inversion of a 1 minute here. So not jumping the gun, we're not taking a 30-second, right? We saw a 1 minute gap inversed. We had some lower time frame relative highs right here as well. We took this trade and it was a loss. Absolutely fine. You cannot try and cherry pick, only the winners, right? You need to take good losses and handle them accordingly. I always say trade size you're comfortable realizing a loss with, right? And this was about 1-to-1 risk reward for me. Buy that at the close, target those highs, right? Just because this is my draw doesn't mean that's where I'm getting out. And this just happened to be a loss, right? This is what a good loss looks like for me. I guess trading view replay doesn't want to work, but anyways, this is in the trades channel. It was a good loss. This was on Tuesday, the 26th of the month. Now, looking at a couple more trades from the week, I think just one more actually. On Friday, we took 2 trades. Okay, this was one of them was on stream, and then one came up later in the day that a lot of us, ended up taking because we understand the DDE model. This is where I'll use the 30-second. Okay. 1 minute, I'm mainly looking at it for reversals. It's stronger, right? 30-second is a bit too noisy for a reversal setup, but I will use the 30-second once we've established our bullish trend. And that's exactly what was going on here. And this is the trade we took live on stream. Okay, New York high to New York low, boom. There we go. Let's draw it out. Right, there was New York low, there's New York high, bullish trend, new all-time highs, closing the month of May bullish. Surprise, surprise, right? And this is posted in Outlooks every morning that I had a bullish bias. What setup did we get here? We got a deep pullback and a very similar setup regarding draw to that Tuesday long, right? All-time highs created here, equal highs, equal highs, equal highs. Market pulls away, traps, longs who had set TP there, induces people to go short, putting their buy stops there. What did we get? We got a retracement into a fresh FVG, right? I believe there was a fresh 15 as well. Market tapped this fresh 30-second. And most importantly to me, we had retraced into a discount of our New York range. Basic principles of economics, 50%, buy low, sell high. Smart money abides by this, just like Joe Schmo knows to buy low and sell high, right? And here is our 30-second inversion, okay? This is when the 30-second is useful. We took an entry on this candle close here, right? Stop displacement low right there. Really low risk trade. 20 points. TP was an upper fresh 1 minute gap, which was up there. right? 1.2 restored, 24 points of profit. Beautiful. Boom. Right? First trade on Friday there. Second trade, this was a little later in the morning. Market had sold off some more. This is more of that reversal, right? Because we had sold off, we had swept, even more sell side by this point here. And I only took this on a couple of accounts because I was pretty much done for the day. But when I see a setup like this, I'm gonna take it. What did we get? Okay, I didn't try and cherry pick a bottom here. Market put in that bottom, cool, whatever. We're still in a range discount from this high down to our New York low. What did we have? We had a fresh 15-minute FEG at these highs. Okay, so if I drop down to, I don't even know why my replay isn't working, but let me just get out of this. We had a fresh 15-minute FEG. If you guys have a 15 up, this high corresponded with that fresh 15-minute gap. What did we get? We got a bit of consolidation in this little range here. Market had formed a bearish gap right here. I'll mark this out. Right, we had tapped a 5-minute bullish FEG. This was my entry. Okay, and this is the entry a lot of people took, in the private circle. My stop was this swing low, right, and that held. And then you can target that upper 15 when you want to go for those bigger trades. When draw and delivery align and you want to hold runners, you can absolutely do that. Again, I chose to do that on 2 of my funded accounts just because, I don't care about them. They're not my priority. When I say I don't care, it's just that's not my focus. So I'll let trades breathe a bit more there. I'll secure some partials. This trade worked out beautifully, right? Draw, fresh 15-minute FEG, delivery, sweep, New York discount, and then entry after we've already established that bullish trend, taking that entry there. And I know this is kind of hard to see on the charts, but let me look at another graphic right here. 1 second. So this is another, way to use the DD model, right? Once we establish that trend, reaction back in trend. So we establish that bullish trend here, we pull back, and then we get an inversion back in trend, which is why I called it that, right? Targeting recently formed trend highs, that fresh 15, and then using that inversion to get back up. I'm going to answer some questions now. All of these trades taken live, they're in the trades channel. So Scooter, yeah, live streams will be starting. ZK is traveling right now. Live streams will start toward the end of this week or beginning of next week in June, right? But my morning streams are still going to be up. ZK will be hosting the afternoon streams. You heard me say not to take IFEGs 1 tick above. No. I said to take IFEGs that are 1 tick above. I said not to take edge closes. Right, when we close directly at the edge, that's not an inversion. We're still within those FEG parameters. But when we close a tick above, that's an inversion. How do you enforce my rules while on the charts? I know what happens if I break rules. Okay, I've blown probably more accounts than most of you guys have traded, right? And only when I make that switch do I see my big months, right? You can certainly have. And there's people in the group who trade my DD model who have hit 10, 20, $35,000 months using my strategy. But that doesn't mean next month that's guaranteed. You still have to obey your rules. And for me, hard stop loss in the market, abiding strictly by my DDE model, right, and stacking base hits. If I'm green 250, 300 per account, I'm not gonna keep trading. Right? If I'm red, if it's just a tough price action day, which we do get here and there, and I'm red 300 per account, I'm not going to keep trading because I know what happens when I break rules. And I know that one day is just a drop in the bucket. Okay. Any questions you guys have, let me know right now, please. We've broken down the DDE model. We've reviewed some of May. I've told you guys how to prepare for June. I'm going to show you my pre-market prep real quick right now as well. How do I stop myself when it's easy as clicking a button? This is a business. This is not a game. Right? If your life truly depends on trading and you really want to be a full-time trader and you have people, counting on you to provide, right? This sounds cliche, it sounds cringy, but trading might be, one of the hardest things you guys do and overcome. And your why needs to be rock solid. It can't be, oh, I want to be I want a new Rolex, or I just want to make this happen. If that's your why, that's not enough. I'm sorry to say it. It is literally a choice, and you need to exercise discipline outside of trading. You cannot be eating like a slob, not exercising, over consuming bad stuff, breaking habits, lying to yourself all day outside of trading, and then come into the market and say, I'm going to obey my rules. You think you're going to obey your rules? Your subconscious knows that you break your rules and you don't respect yourself. Right? Trading forced me to become more patient, forced me to become more disciplined, and I'm thankful for it. If my higher time frame switches its bias, will I switch my strategy? I will never switch my strategy, but I'll adjust my bias. Absolutely. I am not someone who marries a bias. I will reanalyze. And how do I do that? I just, I observe what FVGs are holding, what FVGs are being inversed, and then most importantly, what liquidity is present. On that topic, let's go over our pre-market prep process for anyone who doesn't know real quick, right? Every morning I post my outlook. Every night for the private circle, I post my bias, my weekly bias, my daily bias. But for the free group, you guys see my morning outlook, right? How do I establish that? First thing I do is I look at my post midnight Eastern high and low, right? Post midnight, and this is some free game for you guys who are sticking around. Post midnight, low and high, right? Range. Number 2, what liquidity has been swept? Number 3, what liquidity has been created? Number 4, well, and this, 2, 3, 4, or 5, you can do them sort of in any order. You just need to do all this before the open. What FEGs are being respected, right? Otherwise holding. And number 5, what FEGs, and I'm not talking 1 minute and 30 seconds. I'm talking about 15 minute, 1 hour, 4 hour, so on and so forth. What FEGs have been inversed. This is, what you need to run through before the open. Okay, so let's look at Friday. All right, what did we have on Friday? Post midnight. Now, let me see if this one will let me chop off our 9:30 candle. Okay, boom. That is the market right before the open. What am I doing? I'm looking at my x-axis right here. I'm looking for my midnight Eastern candle, which is right here, right? This is my midnight Eastern. So I'm looking at everything to the right of that. What is my high and what is my low? Okay, well, I see midnight was actually our low, if I'm not mistaken. Yep. So midnight, that was our low. Our high is right there. Are we in a premium or a discount? We're in a premium, obviously, right? We're above 50% of our post-midnight daily range. Reason I use midnight Eastern, that's what ICT advocates for. That's what he believes smart money considers the true daily open. Not the 6 p.m. Eastern the night before, like right now, but midnight Eastern. That is when, global participants generally agree on the true daily open. So post-midnight high and low. That's our low, that's our high. We're in a premium. Okay, cool. What liquidity has been swept? Well, let me zoom out. We just swept all-time high. Again, we're approaching this as if it's Friday right before the New York Open. We just swept all-time high. Got it. Okay, what liquidity has been engineered? What FVGs are holding? What's been inverse? Well, market had just tapped a 15-minute bullish gap here. On the hourly, we probably had gaps. That's when you refer to your higher time frames. Look at those. I'm not going to break all that down right now. Keep these up on a separate monitor if you can, or just flip through tabs. Right? We're reacting positively to bullish FVGs. We're making new highs. We're in a premium. Got it. Outline all of that stuff. And then you drop to a 5 minute. Are there fresh FVGs here? What's the liquidity? And then drop down to a 1 minute. Right? Okay, we're at all-time highs. What do we need to see? In a situation like this, I'm absolutely not chasing longs at the open. I need to see some sort of internal sell side swept. And then, if I'm still bullish, if we tap a fresh 1 hour or something like that, then I'll go long off the 1 minute. Let's see here. What would I say the 5 things need to be understood for the market? Number 1, you just need to understand price action. Okay, just understand price action. Watch ICT 2022 series. Watch my mentorship series. Watch my DDE series. Look at all of our free guides on WAP. Just understand price action. Be confident in staring at a naked chart. Understand FVGs, basic concepts like premium and discount. Understand risk to reward and win rate and expected value, right? All the risk management aspects of trading, understand that. Joey, you say on Thursday we had a big move up, but left relative low with a 15-minute. Didn't touch it. In an all-time high market, we're not going to retrace to every bullish FVG, right? You need to kind of take the pullbacks the market gives, which is kind of what I touched on. What did I say to study? ICT 2022 series. It's on YouTube. Just search it up. 41 episodes long. 100% free. It's just long. But that is what changed my trading. I watched it in 2022. And that's what sort of shaped my trading. Is ICT no rant good? I don't know what that is. Yeah, you pretty much got it, Slam. Right, trading is hard, guys. Trading is hard, but find, a strategy that resonates with you. Find people, you can learn from and study, right? You guys need to be backtesting. These weekend classes, the reason we do them is because this is probably the most impactful learning experience of your trading week. You are not going to be doing, you don't want to be doing your learning when you're in a trade. Oh, well, I just lost 500 on my funded. I'll take it up as a learning lesson. Why do you want to do that if you can learn before, right? Review, backtest, journal, plan, and then trade. Don't trade and then, you know, try and figure things out as you go. Any set rules I can recommend follow on a funded account? I mean, are you trading my strategy? If so, then I can apply specific rules. Otherwise, have a defined risk per trade, have a profit taking strategy, have a daily profit target and a daily max loss you follow. How much time have I invested on FX Replay? Honestly, most of my back testing was done on TradingView. I back tested, hundreds of hours on TradingView before I ever used FX Replay. Do I recommend options? Do I do options? I don't trade options anymore. Journaling absolutely is beneficial. You have to journal. Anyone who tells you not to journal is telling you not to track your business metrics. Trading is a business, right? Any other business, you have dedicated teams to tracking performance and analyzing, business performance and projections and all that. You guys need to take this seriously. I'm being very blunt and honest right now because whatever time we have, I want to drive a message home to you. I'm not in Canada. A lot of the guys in the group are in Canada. I'm in Texas. You TradingView charts are essential. Can I charge using Edge and level 1 data? Can you chart using Edge and level 1 data? I mean, I just use candlestick charts. Java, no problem. And I have a free journal template. Look in the Discord. There's a journal channel. If you like it, message me. I'll send you a copy for absolutely free. Before you join Inner Circle, just study off YouTube. Yeah, Ali, I have a start here guide. That's basically what I recommend for everybody. You can still learn plenty without joining my Inner Circle. Inner Circle is just for the people who fall in love with my strategy and want to trade live with me and want the exclusive resources. But there's a start here channel where you can, basically take full advantage of everything we have to offer. Elijah, great explanations. I appreciate it. All right, guys, that's it for today. I appreciate everybody who showed up. You guys, I believe in you a lot more than, the other few thousand members we have who don't put in any time. Keep it up. Public lounge, use it, take advantage of each other, take advantage of myself and my team. We're here to help you. We have tons of resources absolutely free. If you want to trade live with me, you can do that. Otherwise just keep showing up to these classes every week. June is going to be phenomenal. We have huge news all throughout June where, we have PM streams, where we have these weekly classes, right? And we're going to continue to serve you guys as much as you can.